All right, we'll be watching that. Bloomberg government reporter Emily Wilkins keeping us apprised of all that's happening in the nation's capital. You can read more at Bloomberg.com or on the Bloomberg Terminal. Listen to Bloomberg Radio in Washington, Bloomberg 99.1 and 105.7 FM HD2. Futures moving higher, led by the NASDAQ futures. This is Bloomberg.
Whether you're an in-house counsel or in private practice, Bloomberg Law gives you the edge with the latest in AI-powered legal analytics, business insights, and workflow tools. With guidance from our experts, you'll grasp the latest trends in the legal industry, helping you achieve better results for the practice of law, the business of law, the future of law.
Right, guys, welcome.
Learn more at BloombergLaw.com.
What's the impact of the first new payment network in decades? Jennifer Barker, CEO of Treasury Services at BNY Mellon, explains.
It feels really great to be first. BNY Mellon was the first stock listed on the New York Stock Exchange.
Bear with me.
200 plus years of innovations, we were the first bank to launch a
Should
real-time
work.
payment over the first new payment network in the U.S. in over 40 years. Real-time payments is a game changer, designed to allow consumers and businesses to instantly transact all day, every day. Whether you are a corporate, broker-dealer, investment manager, fintech, or bank, it can help optimize your working capital and bring efficiencies to your clients. And we share innovations like these throughout our enterprise. So BNY Mellon's Pershing business is integrating real-time payments into its investor portal for law firms. It's easy. It can help accelerate money transfers for investors. It's a win for everyone.
To learn more about real-time payments for your business, visit bnymellon.com and click Contact Us to start the conversation.
My simple solution to the problem was remove people from the scene and help them feel safer.
In response to attacks against Asian Americans, Natalie Park raised over $250,000 to donate gas prides to the Asian community.
There is so much more work to be done. We really need to come together and tackle this issue.
Right, okay, amazing. Let me see if this link works. If so, then we can get straight into it.
Political risk, changing regulations.
But yeah, we'll go through a full update,
Help you identify.
and then we'll dive straight into it. Now, obviously, the update that we sent out
It isn't just about
on Monday,
needs
is playing out perfectly at the moment. Obviously, we got a nice rebound. We did try and capitalize. Yesterday, unfortunately, we got just clipped out ever so slightly. Our stop loss was at 27 grand. We breached it. So yeah, we kind of just stayed out. But yeah, let's see where we can go up to. We're coming up to a large liquidity area. Likely to rebound from that point. But yeah, we are making that push up again. Again, as mentioned in that update, PCE prices to come out this week. So yeah, we should be expecting the continuation of prices pushing up, and then either pulling back and then consolidating for a period ahead of that interest rate decision next week. That is your big data point. Let me. Where are we at Wednesday? Let me have a little look. Okay, yeah. So we don't. I mean, we get a little bit of data. It's not insane data. A little bit more European actually. Get some GDP today from the US. Some jobless claims. So we get a little bit of data coming out. But yeah, the big one is next week, really. So markets are going to set up for that. Obviously, we saw a nice push up again. Again, it's the anticipation that the Fed could potentially pause. Again, we're still expecting a little bit of data to come out for the rest of the week. So yeah, let's see what we can get. Things are looking good. They are looking good.
investment options be one size fits all. When you partner with Commonwealth Financial.
Right, okay, let's go through a quick update with you all. Okay, so high time frame, saw a nice rebound. We're coming up to that large area of liquidity just here, about 29,500 roughly. We can pop a Fibonacci on there. Okay, we can go from here, coming up to that 618. We could even almost pop it all the way to the top. So yeah, it's literally around that area there. That's your area for liquidity. Okay, that's where we're looking at prices going up to, holding, and then potentially pulling back, right? So pushing up here, tap for liquidity, come back, and then just a sideways movement, really. We could also get kind of an anticipation for a Fed pause, so we could actually push up a little bit higher, maybe towards that 786 on that fib, so somewhere around this area here, somewhere a bit higher up, and then market meltdown. I think the way things are setting up, there's a bit too much optimism still in the market that needs to be shut off, and that's essentially going to come in if the Fed increases its interest rates by 0.25%. Obviously, the markets are expecting this, right? They're expecting a Fed pause, so any sort of increase is going to cause prices to come down. Now, an important thing to kind of touch base on in terms of next week. Obviously, we get the interest rate decision, then we get the FOMC speech. What you want to really be listening out for is the same thing that you wanted to be listening out for the past 1 to 2 months, right? You want to be listening out for how long are these interest rates going to be kept at these levels for, okay? And whether there's any more interest rate hikes on the cards. Now, whether the Fed comes out and says that or touches base on that, who knows? They're going to roughly be carrying on with the same rhetoric in terms of there's more work to be done. Okay, we're still far away from that 2% target in terms of inflation. And yeah, I mean, things are also not looking good in terms of Russia potentially pulling out from the G7 grain deal, which again, I mean, your energy prices and your food prices are the two main contributors to inflation, right? So if that's the case, again, it's going to cause a problem for inflation. OPEC Plus have already cut production. You're seeing the oil prices push up higher, okay, likely to continue to push up. Okay, so again, this is not good news for the Fed to bring the inflation figure down, right? So, with that being said, okay, we are expecting a market sell-off. Okay, it's very overextended. We're at a very key pivotal point on Bitcoin, right? So there's a lot of liquidity held at this level. Okay, so it's likely to see a large reaction to the downside if everything plays out how I'm explaining it. Okay, now by all means, okay, it's not 100%. You could still continue to push up. Okay, 100% you could. Now the only way really that's going to happen is if the Fed pauses. Okay, and or kind of forecast for the next month or the following month in terms of, okay, it's there's a very high chance that that we're going to pause on interest rates, and any talks in terms of interest rate cuts for this year, that's going to be very optimistic and very bullish for risk on assets. Now, realistically, the likelihood of that happening is unlikely, just because, I mean, the Fed's been sticking by its guns. It's likely to continue to do so until inflation continues to come down. You are seeing month-on-month figures actually push up higher again, so it's unlikely to see a rate cut. Okay, and the Fed has said this and stated this. The market is taking a different route, doesn't want to listen to the Fed and what it's saying. It's just kind of doing its own thing. Okay, so you just go here. Okay, beautiful. Right. Beautiful. Okay, so you got your Bitcoin. Okay. This is very, very bearish movement here. Okay, volume is tailing off here as well. Okay, especially here. I mean, this final push here was very low buy side volume. Okay, and this move is very, very bearish. Very, very, very bearish. Okay, so you do just need to be careful. Don't buy into the whole it's a bull run. Okay, we're going all the way back up now. It's not following the rest of the economic market cycle. Okay, it's really not. You're seeing that labor market, that U.S. labor market starting to weaken, which is a strong indicator for a potential recession. Okay, and if that plays out, the recession starts to creep in, and you start to see the U.S. economy really weaken. Okay, risk on assets will be hurt. Okay, that's why we're saying buy up silver, gold. Those are your safe havens. Okay, and hedge it off. Hold majority cash ready for very cheap prices in the market. Okay, and set yourself up. Essentially, set yourself up for that next bull run. Nicely with very very nice entry prices on your long-term portfolio picks. Okay, it's going to pay off. Okay, you gotta have that long-term mindset here. Okay, so let's go over to a dollar index anyway. Let's touch base on this one. I mean, look at this. It's just looking very very weak. I can get rid of this. There's no need. But yeah, I mean, we could come back down, retest this area here. Okay, hold, and then start to push up, or we could actually see a much larger move to the downside and move back up. Now, it needs to happen before that interest rate decision, because if that interest rate decision comes in at 0.25, this is going to rebound and really start to push back up, and I'm kind of bringing down those risk-on asset prices. Okay, so just bear that in mind. Okay, we are at support. We got a little bit more room now. We could get a double bottom here and actually push back up and rebound quite nicely. We could actually push a little bit deeper. As you can see, the kind of that support range is at 101 at 100.4ish roughly. Okay. So Bitcoin dollar index. Let's touch on these equity markets. I mean, look at that. You can't tell me that looks good at all. Okay, this is pricing in, ready for something. Now Bitcoin in itself is kind of definitely a bit more bullish. Okay, but look at this. You got this top forming here. This is looking like we're going to melt down, and start setting up for that interest rate hike. Okay, so this is, I mean, these equity markets have been pushing up very, very, very nicely, breaking through bearish structure. Okay, so again, the same narrative follows. Okay, the bear markets and they were pushing up higher here, but just look at this. I mean, it's not looking great at all, is it? So, yeah, let's touch on gold. Now in terms of gold. We saw a nice push back up yesterday. We tried to get in on a short, we pulled out break even. It did actually touch our TP afterwards, but yeah, we were expecting a little bit more of a continuation on this move here, but we rebounded quite nicely. It's setting up as well. I mean, look at the markets, how they're setting up. It's telling you information. Okay, this is nice correction. Look at how we're kind of holding this bottom. 1, 2, 3, 4. That's your bottom here. Okay, we could come back down and start to accumulate and really push back up. Realistically, guys, I mean, it's going to come up and test this large area for liquidity again, if not break it, if that interest rate decision does come in fact, at 0.25%. Okay, so your gold, lots of potential. Keep an eye on it. It's likely to push towards that all-time high, if not actually break it. Your oil, again, seeing a nice correction for now. It's ranging, right? It saw this very nice push on that supply cut. It's gonna likely to come down here. This is where your liquidity is being held out. Look at the amount of times that it's tested. This is likely to hold and then continue to push back up and actually break through the top that it formed on that supply cut from OPEC plus. Okay, yeah, it's the structure is very nice. All of this is telling you information ahead of time. Okay, this, if it does start to push towards that $90, it's going to put pressure on that inflation figure. Okay, across one Europe, two US. Okay, it's not going to be good news. But yeah, okay. Do, do.
More regulation, higher expenses, harder clampdown by the U.S. government to try to make sure this never happens again. We also get Roku and Mattel. John, a motley picture of stories that really is not giving clarity in terms of where we are in the economic cycle.
Lisa, thank you. Here's another one. This takes some of the shine off those Microsoft earnings from yesterday. This just in
Right.
from the UK. This written up here at Bloomberg by Catherine Gemmell. Microsoft's $69 billion takeover of Activision Blizzard.
Ba-ba-da-ba-ba-ba-da-ba.
Antitrust watchdog vetoed the gaming industry's biggest ever.
See if we can get anything today. It'll be very nice. Some very nice moves. Mask absolutely blew through.
Involving promises to permit rivals to offer the game on their platforms. That's according to a statement.
I mean, if you even look at that altcoins really got impacted heavily. Lots and lots of blood. I mean, this is obviously kind of the rebounding. Seeing a lot of green at the moment. But again, I mean, if you look on the higher time frame, things are still looking very weak. Got a nice accumulation range here. Now we broke out, pushing up higher. But yeah, still very weak. Very weak. So we'll see whether we can get a little bit more on buys, okay, just to push up a little bit higher. I do expect things to continue pushing up. On the back end of weaker data coming out this week, or the rest of this week anyway. But yeah, the big move is going to be once we push up towards a nice area of resistance, we start to hold, start to topple over a little bit. That's where we're looking to take those shorts, okay, for that much larger move. Yeah, the markets are really not going to take well to another 0.25 increase. That's not what they're expecting at all. So, yeah, the bigger move that you want to capitalize on is that turnaround. That turnaround is the move you don't want to miss on, okay? Because once the sellers start to come in, they're going to come in hot. It's going to be a lot of blood. At the moment, it's more price action, okay? The volume is not there yet. Again, understandably, because we are edging closer towards that interest rate decision, markets are going to hold off. Okay, so please do understand that. It's the reason why we're getting low volume, because there's such a kind of discrepancy between market expectations and the Fed expectations, right? So the market doesn't control monetary policy. Okay, it's the Fed. So the Fed calls the shots. So once you get that Fed decision out the way, then markets will take control, okay? Because all they're doing is, okay, we've got the decision. I've got a little bit more clarity in terms of kind of the Fed's mindset and kind of forecast. So now I've got reins. I can go off. I can move positions off that data, okay? And look ahead towards the next data point. Now, the next data point, the biggest one, is your CPI. Obviously, your CPI came down very nicely. Your headline, it's partly due to where energy prices and food prices were. Mainly energy prices were the year before. But as things move on now, it's gonna slow down. Okay, that headline will slow down because it's going to compare its figures to the Russia-Ukraine situation where it first started. Okay, so yeah, there's going to be a lot of slowing down. So I mean, even when you're looking at all of this, it's the good news that's been coming out is that headline CPI, and now it's likely to actually slow down with an interest rate hike. Okay, with potential continuation in terms of energy and food prices pushing up higher and kind of staying sticky in a sense. Um, yeah, markets are the risk on assets are going to bleed. Now, by all means, I could very much be wrong. I'm not 100% all the time. But when you're looking at the economic outlook at the moment, it's not good. Um, so yeah, there's more bleeding. There's a lot of bulls. There's a lot of bulls expecting this to continue to push up higher. So it's a recipe for disaster. Look at this. This is just such a strong point of resistance. There was a strong candle to the downside. Okay, rebounding off those moving averages. But as soon as if we come down to 24, you can wish the market farewell. Okay, 24, you're back beneath those moving averages. You're back into structure. It's a strong move from the current top that was formed. Okay, just from here. Okay, all the way to 24, 22% decline. Okay, it's a large move. Okay, you can expect this to start to bleed. Okay, look at how volume is tailing off completely. It shouldn't be doing this. Okay, it should actually be pushing back up. You should be seeing strengthening signs at the moment. I mean, by all means, sell side isn't showing a lot of signs of strength. But I mean, when it comes in strong and fast. Okay, and this does look like a top that is forming at the moment. Now, by all means, I mean, we could get pushed all the way to 34 and then come down. There's still a little bit more room. You could get that play out without a doubt. It could. I mean, the institutions could decide. Okay, let's capture some more liquidity here. Let's trap in some more bulls. Let's push this up here. Give them the false sense of bullishness. Trap them in, and then boom. Just turn things around, fake out to the top, to the downside, and just liquidate everyone out of the market. Yeah, guys, this is not ideal buy side to begin a bull run. This should be ramping up in volume. Okay, you're not getting that ramping up. Okay, this is what you should be seeing. This. Okay, a nice ramping up as it pushes through and breaks through these structures, right? You need to see this as momentum to really kind of give the sense that we're pushing up, just like here as well, right? So if this is the bottom where we are, you need to see this. You're not getting that. We're going in the opposite direction. Okay, so yeah, it's for those that are thinking, right, this is the time we're going to recover here. We're going to continue pushing up. We're going to go much higher. It's just not that realistic. It's not.
Cruz says the attitude that the Fed cannot be held responsible or answer to regulation is not right. In San Francisco, Ahmed Baxter, Bloomberg Radio.
The White House confirmed last night that the Taliban killed the terrorist who planned the 2021 bombing that killed 13 American service members at the Kabul airport and Afghanistan. Live from the Bloomberg Interactive Broker Studios, this is Global News, 24 hours a day, powered by more than 2700
So
analysts in over 120 countries. I'm Michael Barr. This is Bloomberg.
180 over 1.
yeah, right. So realistically, the way things were going to play out, okay, I'm going to let this cool off a little bit just because it's had a very nice strong run. Okay, let it cool off, tap support, and then try and catch some long positions, okay, on them altcoins. Still a little bit more to capitalize on, okay, but then yeah, tap resistance, and then we're just going to wait, hold ahead of the week. I mean, we're on Wednesday. We're already reaching at the end of the week. We're not too far off, yeah. So yeah, we'll see this pullback. Okay, get in on some longs and hold until some strong sell side starts to come in and weakening signs of that buy side. And then getting on some shorts essentially. So ideally, the way that we want to go in is get in on some shorts nice and early, okay, just to get the best entries as possible. Just because it's the way things are looking. Like over the weekend, you're going to see a little bit of a pullback, okay, and then things potentially kind of consolidate ahead of that interest rate decision, and then either go up or come down heavily. Okay, so yeah, try and get in on those short positions. Hopefully by this week, if not by the weekend, and then just hold. Just because then the risk isn't too high in terms of getting in at the wrong price. Okay. But yeah, okay, right. Let's leave it there. That's your update. Again, we'll continue with positions. We'll keep an eye on things for you. There's going to be some nice kind of opportunities to capitalize on here. So yeah, let's see what we can get and kind of cash in on some profits. Okay, so thank you very much, and we shall see you soon. Thank you. Cheers.